Imagine owning a small piece of some of the biggest companies in the world. Companies like Apple, Amazon, or Google. Sounds like something only rich people can do, right? Well, that's not true. Today, almost anyone in the United States can start investing in stocks with as little as $50. In this video, I'm going to show you exactly how beginners can start investing in stocks step by step, even if you have zero experience. By the end of this video, you'll understand how the stock market works, how to buy your first stock, and a simple strategy many beginners use to grow their money over time. And before we start, quick disclaimer. This video is for educational purposes only and should not be considered financial advice. Always do your own research or speak with a qualified financial professional before making any investment decisions. Having said that, let's proceed. First, let's start with the basics. What exactly is a stock? A stock simply means ownership in a company. Think about it like this. Imagine your friend wants to start a pizza shop, but needs money to get the business running. Instead of borrowing money from a bank, he decides to sell 10 pieces of ownership in the business. If you buy one piece, you now own 10% of that pizza shop. If the business grows and becomes successful, your piece of ownership becomes more valuable. That's exactly how stocks work. When you buy a stock, you're buying a small piece of a company. If the company grows and makes more money, the value of your investment can increase as well. Now you might be wondering, why do people invest in stocks instead of just saving their money in a bank account? Let's look at a simple example. Imagine you save $10,000 in a bank account that earns almost no interest. 10 years later, you might still have close to $10,000. But historically, the US stock market has averaged around 7 to 10% annual returns over the long term. So if that same $10,000 was invested and grew at around 8% per year, in 10 years, it could grow to around $21,500. That's the power of investing. Your money starts working for you instead of just sitting still. Now let's talk about how beginners can actually start investing in stocks. The first step is opening what's called a brokerage account. A brokerage account is simply an app or platform that allows you to buy and sell stocks. There are many popular platforms in the United States that beginners use, and opening an account usually takes just a few minutes. Once your account is set up, you can deposit money from your bank account into the platform. After that, you're ready to start investing. Buying your first stock might feel intimidating, but it's actually very simple. Let's say there's a company you believe in, maybe a company whose products you use every day. You simply open your investing app, search for the company's stock symbol, and choose how much money you want to invest. The good news is that today you don't even need to buy a full share of a stock. Many platforms offer something called fractional shares. This means you can invest with as little as $10 or $50 and still own a small piece of that company. This has made investing much more accessible for beginners. Now here's something extremely important that many beginners don't realize. Most people think investing is about finding the perfect stock that will explode in value. But in reality, many experienced investors follow a much simpler strategy. They invest in something called index funds. An index fund is like buying a basket that contains hundreds of companies all at once. Instead of putting all your money into one company, you spread your investment across many companies. For example, some index funds track the S&P 500, which includes 500 of the largest companies in the United States. This means when those companies grow over time, your investment grows as well. This approach reduces risk and makes investing much simpler for beginners. Now here's the real secret to successful investing, and it might surprise you. Investing is not about getting rich overnight. The real secret is time and consistency. Let's use a simple example. Imagine you invest $200 every month. That may not sound like a lot of money, but if that investment grows at around 8% per year, after 30 years, it could grow to more than $300,000. That's because of something called compound growth. Your money earns returns and then those returns start earning returns too. It's like a snowball rolling down a hill. At first, it moves slowly, but over time it gets bigger and bigger. Before you start investing, there are also a few common mistakes beginners should avoid. The first mistake is trying to time the market. Many people wait for what they think is the perfect moment to invest, but the truth is that no one can predict the market perfectly. The second mistake is panic selling. The stock market naturally goes up and down, and beginners often get scared and sell their investments when prices drop. But historically, markets have recovered and continued growing over the long term. The third mistake is investing money that you might need soon. Stocks are better suited for long-term investing rather than short-term financial needs. If you remember only 3 things from this video, remember these simple principles. Start early, invest consistently, and think long-term. You don't need to be a stock market expert to start investing. You just need to take the first step. Even small investments today can grow into something powerful in the future. If you found this video helpful, make sure to like the video and subscribe to Simplified Finance. On this channel, we break down investing, personal finance, and money strategies in the simplest way possible so anyone can understand them. And if you want to keep learning how to build wealth step by step, check out the next video on your screen. Thanks for watching, and I'll see you in the next video.